may profits be upon you. Listen, I want to share some insight into how I'm looking at gold right now and where the opportunity is. Okay, now what we have observed, this is the weekly time frame that we're looking at. What we have observed since December on this candle here, yeah, since December is price has been making week after week higher highs. Each new week is breaking the high of the previous week. That's awesome, right? All right. But what we want to see is a break of market structure. Now, here is a high here. You like that? A high here's a high here. All right. There's a high here that is important. This is a swing high, and it was broken and traded through. All right. We traded through that high. Why is that important? Because one, the nature of the break. If it was just a wick above, we can say this here is an indication of a shift in the market. All right, a shift from bearish to bullish. Okay, and it also represents not just a liquidity grab, because there's liquidity above these highs. All right, there are people who took shorts here, and the market comes back and gets them out of their trades. Right. All right, and uh, uh, what you want to recognize is that the bias is bullish now. All right, it is bullish. It was bearish here. All right, we see the push back up, and then another push down, push back up. We say, okay, what are we doing here? Then you see the bears come back in, push down, and then we have this months long, couple of months of price just moving up. So we want to make sure that on the weekly we are bullish. Okay, and when we go down to the next time frame, think of your time frame alignments. From the weekly, you go to the 4 hour. All right, and just stay with me on that. All right. Now, you see the high is being broken here. All right, and what you want to make sure you see is uh, the push, the pullback, the push, the pullback, the push, the pullback, the push. All right. What is causing this? All right. When price breaks the high, you're looking at that impulsive move. You're saying to yourself, all right, when price pulls back, I want to be there. You divide that trading range, the swing low to the swing high. That's a trading range. All right. And that's the range of this impulse. You divide it in half. The upper half is your premium, and the bottom half is your discount. You want to take your sells from premium. You want to take your buys from discount. Follow me? All right. Good. So far, so good. All right. When price breaks structure to the upside, you say, okay, we're bullish. I'm only looking for buys. If price only comes this far, this is not the area you want to take buys from. That's not high probability. It's higher probability when it goes past the 50%. You can use your Fibonacci tool to illustrate exactly what I'm talking about here. Look, right there. Boom. I'm trying to move it to the side here, and it's driving me crazy with that magnet. All right. And if I show you, this is equilibrium, the 50%, the halfway mark of this trading range. You're waiting for price to come back at least 50%, below the 50% before you start thinking about buys. And while price is up here, while price is up here in this section, when it first starts to turn around, you say, okay, I'm going to mark it. I'm going to mark it with my Fibonacci tool, or I'm going to divide it in half and everything. Before it even gets down here to 50%, you're looking for the area where price can find support. All right. And that'll be this area here. This when it breaks that high, this is your natural area of support, of demand, or your area of fair value. And this is what the market does. It offers that fair value down here for price to, for investors to come down here and involve not just buyers but sellers. That's the fair value. All right, that's the fairness of the market. That's what it does, and it pushes higher to the next high. All right, and we do the whole process over again. All right, we got another area of an impulsive move. We've Once we break that high, we have an area of fair value here. All right, some people call this an area of demand. All right, a demand zone, or a large order block. All right, and you're waiting for price to come back into that area of fair fair value and find support. Where is where would be the support be? Would you find it at the top here? All right. Would you want to take this buy here? Oh, it worked for a minute, but then you see price coming back down. Why is it coming back down? Aha! Did you divide the area into 50? Premium and discount? No, you didn't. Don't even lie. All right. So here's the area of premium prices and discount prices. Price, if you waited patiently, price did come back down to the 50%. And what did we find there? This is another area of demand. This is the most recent demand. All right. And this is the low. This is the low that broke that high. All right. I don't expect prices to come back below that low. All right. That's what I would call my protected low, because it was the low that broke that high. So it just so happens to align with this area of demand, or an order block. All right, you can see price moved up, pushed down, and then up. This area is what broke that high, and price comes right back to it. Boom, and you see what happens. Now, again, what do we do now? Same thing. All right, we divide it in half. All right, premium, discount. You wait till price comes back to discount. Does it come back to discount? You betcha. And we break structure again. That happened last week, right? Now, we got the structure. We have the bias for the higher time frame, right? What was that? Weekly was bullish. Okay. Are we bullish on the 4 hour? Are we bullish? Not so fast. Once we break, yes, we are. Once we break structure here, and we get that market structure shift from bearish to bullish, and you wait for price to come back to that fair value area, and you look in this leg of structure, that impulse for that 50% mark. All right, you want to use the Fibonacci, you can. All right, price comes back to that 50%. You find, oh wow, look, an order block. Look at that, an area where price is offering fair value. All right, and this is an area of demand, and price comes right to it. Boom. I expect price to continue higher, just like it did here. Boom, boom, boom. I expect price to go higher, take the high out, and create another area of fair value for price to come back into, find support, and continue higher. So we got the higher time frame, the weekly bias is bullish. We have a bullish 4 hour. What is our next time frame? 15-minute. We want to catch this. We want to catch the contact here Now, this is the first candle of the market open for this week. All right, it came right to this thing. We didn't even have time to get in there, but we can't jump so fast. We got to wait until we get our signature by price that says price is ready to turn around and go up. All right. Right now, we are bearish on the 15-minute. All right. As long as we're above here, above this low, we are bullish. Yes. And we are in a retracement. But on the lower time frame, we're not aligned yet with the 4 hour and the weekly. And I'll show you what I mean. We're just going down lower. 15-minute. All right. The 15-minute. All right. And we see that price is bearish. You see the market structure shifts along the way. A double break, a double shift of market structure here where it goes from bullish to bearish. All right. We got to wait until it turns bullish again. All right. So that it'll be aligned with the 4 hour and the weekly. All right. When they're all aligned, that's when you have your highest probability of taking your buy. All right. And we want to take buys because why? We are in an uptrend. I'm not interested in taking shorts. All right. You can take shorts. They're going to be short term, and you can do that all day on the 1 minute, 5 minute if you'd like to. All right. And there's plenty of people who make money doing it. All right. But I'm not interested until we see price come down, tap this area, take some liquidity, and then breaks market structure here. Gives me a market structure shift so that it can pull back into it. This low becomes my protected low, and I'm waiting for price to find an area of demand to come into below the 50% so that we can take it up higher. All right, so we got contact. We are bearish here. This has to turn bullish first. This time frame has to turn bullish before I'm interested. Okay, so what do we need to see? This high. All right, we need to see that taken. All right, now if we go down to the 1 minute, price could come down here, sweep that low, and then break higher. I would be interested in taking longs from that area. There is an area of demand here, but there is no the liquidity low. I like to see a liquidity low before it hits an area of demand. I like to see price come back and sweep a low like this one before it goes in. So I'm not really putting a lot of emphasis on that particular area of demand, that order block. It's straight, so it'll probably go through. It'll probably go through this one to tap this demand. All right, to before it starts to turn around. I'm looking for a move above structure. I want to see a market structure shift and then higher. All right, if we go down to the 5 minute, I'm giving you all of what I do. I'm giving you everything I'm doing. All right. You see how I have that line there? That was on. I don't mean the 5 minute. I meant the 1 minute. You see that line there? See how price pushed down? Let me see. See how price pushed down here and then pulled up and then down? That is a market structure shift. And price hasn't gone past it yet. It hasn't gone past it. That's why I have that line going across. That's why I have this line going across. What I'm thinking is going to happen is price is going to take this low and then break these highs. That's what I'm going to be looking for, even if it's just a wick. Then as soon as it does that, I'm looking for that to be my protected low. All right. And I'll be waiting for price to come back into that protected low. I'm going to look for the 50% of this area. All right. This impulsive move to the upside. And when it finds itself some a demand zone or an order block down here below the 50%, that's when I want to pounce, because now we have alignment. We have alignment. Once this breaks, then the 1 minute is now bullish, and we're in. Once it retraces, this is where I'll get my highest probability trade entry to take it to the highs. And what highs would I take it to? What highs would I take it to? I'm going to tell you. I'm going to give you all. I'm going to give you this much. I'm not going to give you that. Come on. All right. Wrong one. All right. All right. I'm all right. All right. Now, you want to see the market? I want to see the market take this low. It doesn't have to. If it comes all the way up here, this becomes my area of demand. All right, and this could hold, and I'll put my entry up here. All right, this would be my protected low, but I don't think that's going to happen. All right, it may, and I'll keep my eye out for it. But I'm looking for what I just described to you. I'm looking for price to come down here, and then give me a move up, and then back. Find the demand, find the demand zone over here, and that's where I'll have my entry. And I'll be looking to put my stop loss generously below that swing low, that protected low. And then I'll look to go back to my 15-minute, the higher time frames. I'll be looking to go here to the highs. That's right. Now, this is an 8 to, a crazy uh, risk to reward that I'm looking at here, but it's possible if you want to hold on to that long. I honestly, I don't. All right, I don't ever. I have a fixed ratio. I like to look for 2 to 1s or 3 to 1s, but most of my trades are done 2 to 1. And you can enter on the 15, or you can go down to the 1. I told you what to look for. If I can get rid of that blue scribble scrabble, told you what to look for. But the 15 and the 1 are going to be your best entry areas, entry time frames. And I want to be targeting the highs. If price comes back down to this demand and sweeps that low, you put a stop loss on the 15 minute. You put your stop loss below this protected low, and you shoot for those highs. And you're going to expect to make that trade. You're going to expect that trade to hit TP, because it has been hitting TP with the exact same method. Boom, boom, breaks the high. Boom, boom, breaks the high. Boom. That's all we're expecting. We're not expecting anything ridiculous. All right. You want to shoot for anything up here, then you go right ahead. I'm not doing all of that. All right. Because I can make plenty on 2 to 1. I just wanted to share that with you. I'm just trying to make more videos like this to help my newer traders, my viewers that are just getting along. And if you have questions, I welcome them. All right. And I just want to build a good community of good traders. That's what I want to do. Anyway, may profits be upon you. I'll see you in the next video, and thank you for watching.